All right, YieldNerds, episode 123. We are roaring ahead to within 6 months of the election. How exciting! And in the meanwhile, I just happened to discover a unique and risk-free way to be greedy with yield. And you get away with it. And I want to share that with you because that's the kind of guy I am. And no wonder that's the kind of guy I am because we are clocking on subscribers. We are up to 328 subscribers. Thank you for your loyalty. If you are new, I suggest you look at the playlist called the Income Investing Roadmap. It starts from a beginner level and walks up to this episode. Please remember, I do not pull rabbits out of hats here. I share what I have learned, and I am wrong before. I have been wrong before, and I will be wrong again. Use your own judgment. Well, here is the agenda I laid out for this time. It has 4 items. First, we'll go look at the market. This guy is sweating a little bit. I don't know why. We'll check in on it. And a little bit of a lesson on a preferred stock. And it's a lesson on greed. And also how to be greedy with the stock market and learn from the gold rush. And then I will share my trades. How has the market been doing? Hey, what's going on there? What went up, came down? What a surprise. If you were following the Dow or were heavily invested in Dow stocks, you may have seen a little bit of up and down in the last month. The NASDAQ, however, NVDA is magical. It only goes up. How amazing. Good for you if you're on the NASDAQ heavily and especially on NVIDIA heavily. My boring portfolio, it just climbs up in one direction and it gives me about 6%, something like that a year, but it's state tax free. And, I don't have the up and down, thank goodness, but that is me. How do I do it? As you may remember, I only had 0.46% on stock. Everything else is in fixed income. But look, I went from 0.46% to 0.49%. I want you to know I'm entering into equities big time. By that, I mean a couple of more stocks here and there. Well, in terms of my time to maturity, I am also very distorted on an extreme side. About two-thirds of my holdings are T-bills that mature within literally 90 days. That's a choice I'm making. And even the rest, I barely have anything past a year. And the stuff that I do have past a year are agency bonds, a little bit of duds from a previous life before I started YieldNerd, some corporate bonds, and then I have some really long-term agencies there. So now I'm going to get into the meat of the matter, a lesson in how to be greedy with preferreds, because you can't be greedy with preferreds. Look, this guy is panning for gold in front of the stock exchange, and it's working out well for him. Most importantly, I'm about to share some specific stock information or bond information. I want you to know I am not a wealth management advisor. I don't pitch product. There is no snake oil for sale here. I don't do politics. So make sure you know this is not investment advice. Here is a mystery preferred stock. This stock original coupon is 8.5%. How amazing! I want to get this stock, and it looks like I need to buy that, and I can be greedy. 8.5 is a phenomenal yield, and it turns out it even belongs to a utility company, which is very stable in general. New Star Energy owns terminals and pipelines. As you can imagine, it's pretty stable. You can't really yank out the pipeline from the ground and ship the oil through a FedEx truck. So this seems like a risk-free buy. And I started looking into the stock, and look, even the preferred stock price is growing. Obviously, the idea is that the interest rates are at 5.5, you can make 8.5. So it's okay. I mean, if you pay a little bit above par, instead of $25, you're going to pay $26. But hey, the yield is 8.5%. Just calm down and pay a little bit more above par. People do this in municipal bonds all the time. They pay $5, $6 above par, which is a 6% premium. Here you're only paying a 4% premium. Good for you. You should buy that. Don't worry. Whoa, what happened here? Look at that. That stock crashed instantly and it went back to par value. And you sit there and say, my yield to worst was negative 4%. Instead of making money, I actually lost money. How could that happen on a preferred stock, especially a utility? The utility company didn't go bankrupt, did it? Well, a little bit of Google on New Star Energy will tell you they didn't go bankrupt, they just got acquired. So when Sunoco bought New Star Energy, the first thing they did, they assumed the stock and the debt, and they said, we're just going to call the preferred stock. And the preferred stock is the holding company of the limited partnership. And so when they call the debt, they're going to buy it at par value. They then totally liquidated people who had bought above par. Moral of the story, if you're buying preferred stocks, watch out. Be careful buying it above par. And I personally do not buy any preferreds above par. I also do not buy munis above par. That's just something I do. You do you. Well, maybe we can be greedy in the stock market. That's always a good thing. And again, I'm going to call out specific stocks, use the main caveats that I've reviewed before. For inspiration, I went back to the gold rush. And I said, did gold miners get rich? Because I want to dig for some gold, because I'm inspired by how amazingly well some of these stocks are doing. And this is Wikipedia. It says, a few got very, very wealthy, but many of them earned a little more than what they started with. Ooh, their yield to maturity was zero. And you sit there and say, how could that happen? This is digging for gold. And so I started trying to research who were the ones that really won in the gold rush in large numbers. Turns out people from all walks of life understood that there is just as much money to be made serving the gold miners as there was in digging the gold. A steamboat operator makes 40 grand a month in 1850s. A chicken farmer, my kind of people, they sold one egg for 50 cents. Yeah! So you sit there and research more about what kind of people got rich during the gold rush, while the people who panned for gold failed in large numbers. It turns out, the gold miner also had to eat sandwiches. There were companies that sold meat to put in the sandwiches. They needed wheelbarrows, they needed to wear pants, we all know that story. They needed to borrow money, many of them did, and they needed to live in a home or a shed or a tin can. And so the people who really got rich in large numbers were people such as Sam Brannan. He bought a bunch of carpet tag companies and said, you want to buy a home because you relocated here? You're going to nail the carpet to your floor? I'll sell you that nail. What a great value investment. Levi Strauss, we know his story. He just took two pieces of canvas and put a rivet in there, and the rest is history, as they say. Ormer Meat Company, the butcher, made a ton of money selling deli meat sandwiches. Wells and Fargo, we know about those two. Studebaker, got his start by selling wheelbarrows to gold miners. And whether or not you found gold, you had to do all of that. So what does that do? It makes me want to go back and say, how can I be one of those kind of people? I don't have the personality to dig for gold in the market right now. And so my thesis is that the honeymoon is not exactly going to be a wonderful thing. My state tax-free returns are around 6%. I'm okay with that. Currently, my confidence in the geopolitical stability is not high. I'm sorry to say that. It makes me feel like, we're not going to get along as nations as well. Our ability to have civil public discourse is also degrading. And so I'm going to be in the lower risk side of the house. I'm not panning for gold. I will sell sandwiches. No problem. They'll be vegetarian sandwiches, sorry. And also I am diversifying into food, energy, defense, and pharma with a very simple principle that all gold miners, whether or not there is a market elation or market crash, you still have to eat. You have to turn on your stove at home with natural gas. And for those of you who said, I don't want to use natural gas, I'm going to use an electric stove, go find out how your local electric company makes its electricity. Hint, hint, they burn natural gas. Defense companies, as I said, my confidence in geopolitical stability is low. And of course, we're going to take pills. We can't stop taking them because our health is at stake. So what does that mean? I went back to my Defense Magnificent Seven. I'm not very excited about them, but they are the best of available options if I stuck to my thesis. Huntington Ingalls has a pretty good price to earnings ratio. 14 is okay, except their profit margin is very thin. And there is something going on within the company with Newport News. We'll talk about that in a second. And Curtiss-Wright, has it okay on profits. I mean, none of these are TK Tankers. I'm in love with TK Tankers and Cal-Maine Foods. They have profit margins of, 28% and 40%, but this is as good as it gets in defense. But the PE ratio of Curtiss-Wright is very, very high. But I started understanding these two companies, and my thesis is that given geopolitical instability, we can't just look away on defense spending. Curtiss-Wright, has very predictable and growing revenue. If you compare each quarter to the previous year, same quarter, both revenue and cash flows are in a very nice growth trajectory. Not only that, they get contracted guaranteed revenue. So I was excited about that, even though I'd like for them to make more money. So their PE ratios come down. Given the geopolitical instability comment I made, I'm thinking, whether you like it or not, we're going to spend more on defense, not less. Huntington Ingalls had an absolute crash of roughly around 11% when they announced that a submarine they are building, they can't find the right parts and it's delayed, and they had a big crash. Having said that, their PE ratio now looks attractive to me. And among the other things they do, I think if there is geopolitical instability, we're going to spend more on the things that Huntington Ingalls makes. And so what did I do? I opened positions on both Curtiss-Wright and Huntington Ingalls while I have my wheelbarrow full of eggs. And hey, speaking of eggs, remember the stock called the NVDA of Eggs? The orange line is NVIDIA. Here you go. The blue line is the NVIDIA of Eggs. Look at this absolute amazing performance. You guys are all very conservative. You should go buy stock of Vital Eggs, is what I wouldn't say. As much as Vital Eggs is doing an amazing job, I just peeled under the covers a little bit. And, there's some bird flu going on. Vital Eggs predominantly sells premium eggs that are free range. And free range chickens have a much greater exposure to bird flu than their caged compatriots. So I don't know how, predictable Vital Eggs revenue is going to be. I wonder if their inside management knows. Maybe their senior management knows. Let me see what they are doing. Whoa, hold on a second. Jason Dale, the chief operating officer, is selling shares faster than you can say hello, and he is not buying one single share. How about that, Mr. Dale? Good for you. You're making it public that you're selling shares, and people are still driving up the share price of your company. They must know something you don't. This sale is part of a broader trend at Vital Farms where there have been 33 insider sells and no buys in the last year. So, hey, good luck with Vital Farms. If you buy it, let me know how it goes. My holdings in the meanwhile are all in the defensive sectors. If you look, I have energy, food, defense, and pharma. I do have one oddball here, and that is for income. And this is American Home. I did buy it below par. I don't violate my own principles. And that pays me a dividend, or rather, it pays me a coupon because it's a preferred stock of 6.57%. I'm just sitting on it. And so that is my holding. My look ahead is not very optimistic in terms of the market. I do intend to add equities in the defensive sectors, but I will have no more than 5% of my portfolio in it. And it is my opinion that we're headed into downward pressure between now and the end of the year. Bring it on, YieldNerd Power. And this is also the coolest store there is. They sell submarines, eggs, and gasoline. Thank you for watching YieldNerd. Hey, remember, even a broken clock is right twice a day. Don't trust me. Do your own research. And thank you for watching YieldNerd.